Yes, Gaurav, thank you so much. Thanks for having me here. And as you have already pointed out, that we are going to discuss on tax planning, investment declaration, and proof submission. So I am Rahul. I am by profession a company secretary, and I'm a consultant to Clear Tax. Along with me, I have Saikat Roy, who himself is a chartered accountant, and he serves in Clear Tax as the tax manager. He handles the income tax team. And we should start without wasting any time. So to start with, let us first see, like, why are we here, what are we going to understand with the from the webinar today we are going to have. All right. So the key takeaways would be, what should you declare? Why should you declare this? And what are the proofs that has to be submitted? And what happens if you do not submit the proof? So there are many aspects here, and it is all about investment declaration. Apart from that, we will also discuss what are the various avenues where you can save your taxes, and what is the difference between the new regime and the old regime. We'll be discussing all of this in details. Starting with the investment declaration. So, who all is required to pay taxes? First, we have to understand this. I think we are already having a basic idea about this. So, mostly we have known that anyone who's having income below 2.5 lakhs, 2,50,000 in a financial year, they do not need to file their income tax returns. But there are certain exceptions to it. Okay, like say for example, if you have been paying tax through some other channel, someone is paying you an income and they are deducting your taxes. For that, you have to claim those tax deducted. You have to file your return. Secondly, say for example, if you are going abroad and you have to apply for visa, they would be asking you for ITRs. So for that reason also you have to submit your ITR and various other reasons. And once you cross the threshold limit of 2.5 lakhs in a financial year, so then starts that you have to file your income tax returns. But still, you will not be required to pay taxes till your income is up to rupees 5 lakhs. Now, this income, what I'm talking about is the net taxable income. All right. So whenever your net taxable income crosses the threshold limit of 5 lakhs, then only you have to pay taxes. Now we all are discussing how to bring down the gross income less than the income taxable limit with certain deductions, certain exemptions, and all. And then this topic comes into picture. So what are the like, when we declare the proofs to our employer, what employer does exactly, why these proofs are important? So whenever you give your investment proofs, your expenses, the employer calculates accordingly, and then they do a tax computation, like how much of income tax should you be required to pay, and accordingly they will deduct the taxes monthly from your salary. So this is just a kind of an advance tax what you are paying, and your employer is deducting from your salary. Now, if your employer does not have a proper document against your name, that how much you are investing, how much you are saving, how much can you save, they will simply deduct the taxes on the entire salary what they are giving you, and then you will end up paying higher amount of taxes. So this is the reason you have to declare your proofs to the employer in time, so that they have the proper calculation. They will deduct appropriate tax and not a higher amount of tax. Now, you have to choose a regime according to your deductions or investments, which regime would be beneficial to you. We can have a discussion in details in the later slides. All the investments like insurance, home loan, rent paid, this has to be declared. So we will just see in details about all of this. When do you have to declare it? The payroll team always gives you a timeline, like by this date you have to declare the your investments and your proofs. Okay, so I think for many of the organizations, some it is 27, some it is 31st, so you have to declare by then. Okay, further, incomes can also be declared to avoid tax. Now, why do we declare this proof? As I've already told, that if you want to pay higher taxes, please do not declare your investment proofs. But if you want to save your taxes at the very beginning level, before you get the salary, so your employer should be knowing that, okay, I will not deduct higher amount of tax, and you will get enhanced salary, like a good amount of enhanced salary. All right. So we'll just go to the next slide. Now we will just try to understand what all proofs and what all investment declarations are required for what all type of expenditure. So we'll try to understand each expenditure, each exemption, what is available to us in detail, and then we will see what all proofs can be submitted for that. Now, first we'll start with house rent allowance. So, house rent allowance, I think all of us know that whenever we are staying on rent, so we actually incur certain amount of expenditure on rent and maintenance, and this is actually tax deductible. Now, is the entire amount of rent we pay is deductible? The answer is no. Firstly, we have to see whether the employer is giving us the component of HRA in our salary or not. So please check whether HRA is available to you. If the HRA is not available, you can consult with your payroll team. You can further break your salary and get the HRA component so that you can claim it. Secondly, once you have the HRA component, you have to see in which city you are staying. Now, say for example, if you are staying in Kolkata, Delhi, Mumbai, Chennai, these are metro cities. Okay, so here if you are staying, you can get 50% of your basic as HRA, and that may be claimed as an expenditure depending upon the rent you pay. Apart from that, any other city you are staying, you can get only 40% of basic. And so the company breaks your salary into basic, HRA, some other allowances like medical allowance or traveling, food allowance, whatever it is, LTA. They break it down further. So that HRA component, what you get, that also may be entirely exempt, as I said, depending upon the rent you pay or the actual rent you are paying. So there is a calculation. Not entire amount of rent you pay will be exempt. Please understand this. Some of us, what we are doing, we are expecting that whatever rent we are paying, the entire amount should be exempt. This is not the case. It depends what is your salary structure, how much you are getting, and what amount of rent you are paying. Like say, for example, if your salary per month is 1 lakh, you are paying rent of only rupees 5,000. We may have a very less amount of HRA exemption there, or even in certain cases, there should be no HRA exemption. Okay, so we have to use this formula to calculate what is the HRA exempted to us in our hands. So any of these three, 40 or 50% of basic, actual HRA received in hand, or rent paid in excess of 10% of your salary. So this amount, if you see, whichever lower comes, this will be the amount of exemption in your hand. So you can use any of the income tax calculator to calculate if you're not okay with this formula. So this is how this HRA is being computed. So please keep in mind that the entire amount of rent will not be eligible for HRA. Secondly, we go ahead to leave travel allowance. So I think most of you know about this, that whenever we travel on leave, so the first criteria is that you have to apply leave to your company. Once you apply leave and then you are traveling for any purpose, maybe you are going for tourism, or if you are going somewhere within India, only the domestic travel is included here. So whenever you are traveling, and it should be you or any of your family member along with you. So if they are going and you are not going, you cannot claim LTA. So in this case, whenever you are traveling along with your family, you can claim the leave travel allowance for only for the to and fro traveling expenditure. If you stay in a hotel or if you eat good food, all of this will not be included. Only traveling expenses will be included. Now, what all type of traveling expenses can be included? Can I include if I go by car? Answer is no. You cannot include that. In certain cases, whenever you are going where the train or flights are not available, then only the approved public transport can be used, just like buses. So those expenditure you can claim. But apart from that, only first class train tickets or economy flight tickets can be claimed for leave travel allowance. That is only to and fro expenditure for you or you with your family. And now, can I claim it like every year? The answer is no. LTA is only allowed twice in a block of 4 years. So it is 4 calendar years. Now the new calendar year, like the new block for the calendar year, has started from 1st of January 2022. Okay, so please keep in mind that if you have not availed, you can plan for your leave travel allowance if you have it in your component, if you have it in your salary component. Going ahead. Now we all know that whenever we buy a property on loan, like a house property on loan, then we can claim the interest what we are paying as a deduction in our income tax. Okay, so how to do that? Whenever you are buying any home on a home loan, then the interest component up to rupees 2 lakhs you can claim under income from house property. So that would be reduced from your total income. All right. Now, can I claim more than 2 lakhs, or can I carry forward any extra amount? The answer is no if the property is self-occupied property. Okay, if you are staying in that property, you cannot claim more than rupees 2 lakh of interest. Now, what will happen to the principal component? Say, for example, if I'm paying EMI will have both principal and interest component. Interest component up to rupees 2 lakhs, I can claim under income from house property. What will happen to the principal component? You can also claim that under section 80C. I think this is very common. We should be knowing this. So you can claim the principal component under 80C. So the entire limit of 80C is 1.5 lakhs. All right. But in case if you have a let out property, you have bought the property on loan, you have put it on rent, and you are receiving some rent. Okay. Like say for example, if you bought the property and you have put on a rent of 50,000 per month, this will give you 1,80,000 per year. Now say for example, if you are paying EMIs for which you are paying 3 lakh of interest, just in case, if you are paying 3 lakh of interest, then 1,20,000 becomes your taxable income from house property. Okay. Why so? Because 1,80,000 was should be reduced by the interest you have paid. So entire 1,80,000 will be adjusted with the interest you have paid. Remaining 1,20,000 out of those 3 lakhs, it can be adjusted with the other income what you are having. Okay, so you can adjust only when you have a let out property. But in case of a self-occupied property, if you are paying 3 lakh of interest, only 2 lakh can be adjusted. Remaining 1 lakh will lapse. Okay, so this was the basic understanding of interest on home loan. Principal component we can claim in 80C. And okay, in the year 2019, government has introduced a section called as 80EE. Before that, back in 2016-17, we had 18EE, where you could claim additional 50,000 in 80EE. Here you can claim additional amount of rupees 1.5 lakhs. Okay, now here are certain conditions. This is, please mind that this is above rupees 2 lakhs of interest in income from house property. So if you are taking a home loan where the stamp duty value of the property is not more than 45 lakhs, it should be less than 45 lakhs. And if the home loan is sanctioned between 1st of April 2019 to 31st of March 2022. So between this period, if you have taken loan and if you are paying interest on that, obviously you will be paying interest. It should be the first property you are going to hold. You should not be having any other property. Okay, or it should not be a joint property with someone else saying that I had one in my name and this is a joint property. That should not be the case. So in that case, if this is your first property, loan from bank, stamp duty value of less than 45 lakhs, sanctioned between this period, you can claim additional 1.5 lakhs under 80EE. So this can be an additional benefit, but unfortunately the time has gone. So if you had already purchased a property between this period, please avail this benefit. Going forward, now we have to see what 80C can give us. So I would advise all of you that you should try to utilize this section as much as possible, because this gives you 1.5 lakh of benefit. Okay, this 1.5 lakh is not tax. This is the income which is reduced from the total income. Okay, so what all avenues we have in 80C to invest? So one we have already discussed that if you are paying principal component of your home loan, that can be adjusted in 80C. Apart from that, whenever your employer is deducting PF, Provident Fund, that can be adjusted in 80C. If you are taking public Provident Fund, that also can be adjusted in 80C. So the entire limit is 1.5 lakh. So you can try to invest as much as possible to claim this limit. If you have children, you can you can take their tuition fees under 80C. If they are going in school, college, or university, you can claim whatever tuition expenditure they are you are spending on them. Apart from that, if you are paying for life insurance premiums, you can claim that. Even term insurance is also included here. And there are certain conditions when and how you can claim the life insurance premium. So if you are paying insurance premium which is more than 10% of your sum assured, then you cannot claim, unfortunately. Okay, so you have to keep these things in mind. Generally, when you buy an insurance policy, at the bottom they will explain you where all you can claim this. But they say they mention a clause that please check the conditions before claiming. So this is the condition. Apart from that, principal on home loan we have already discussed. Going forward, there are certain other sections which are actually not under ATC, but cumulatively they form a part of this. Okay, so whenever you are paying for any pension plan, okay, then also that amount you can claim. So employer's contribution to NPS, it is limited to 1.5 lakh that you can claim under ATCCD1. Okay, it is employee's contribution. When employer contributes for you, then maximum up to 10% of your salary you can claim. Now, if you're earning too much, if your salary is good, so what you can do is you can only claim up to 7.5 lakhs. Here is a limit in ATCCD2. Apart from that, like say for example, you have exhausted your ATC, okay, the entire limit of 1.5 lakhs is exhausted, but you still want to save a certain amount of tax additionally. What you can do, you can invest in NPS separately. You can go and voluntarily invest in NPS. You can claim up to 50,000 in ATCCD 1B. So this is one section where you can invest if you're planning for a long-term investment. Obviously, NPS is not a short-term investment. If you're planning for a long-term investment, you can plan for this NPS under ATCCD 1B. Okay. Apart from this, like say for example, people come and ask like, what are the good options to invest in ATC? So there are various options as I've already discussed. Apart from this, like say for example, if you're investing in fixed deposits, so tax saver fixed deposit, okay, that is one particular type of fixed deposit which is available with banks. But the only issue is there the lock-in period is for 5 years. If you withdraw any time before 5 years, then that amount will be taxable. Okay. Apart from this, we have a good option called as equity linked savings scheme. I think we already know this. We can invest in equity linked savings scheme, and it has to be logged in for only 3 years. So compared to all the other investments like PF, NPS, and FD, we can invest in ALSs for 3 years only. Now there is an issue in ELSs also. If you are investing lump sum, if you are investing one time, okay, then it is okay that you can withdraw it after 3 years. But if you are investing in a systematic investment plan, then what happens is every month you are investing. Now it is not like that. In first year, whatever you invest, you can claim in the third year. It is not like that. So if you invest in the month of January, say for example in 2022, if you invest in January, then that amount becomes withdrawable only after the end of January 2025. The second month, February 2025, third month goes on like this. Okay, so we have to keep in mind how and when we are withdrawing that, so that we can avail the exemption, otherwise not. Moving forward, so here we have certain explanation to understand which of the regime is beneficial to us. So back in 2020-21, government introduced one new concept of a new regime. Okay, so earlier we were paying taxes as per the old regime in the slab rates, what we already know. So government told that if you are not having much of deductions, if you are not claiming much of exemptions, like say for example, if I have ancestral property, I'm not paying rent, I'm not taking any home on loan, I don't want to invest anything in the insurance, everything is being covered by the company, and I don't have children, I'm unmarried, so I don't want to invest in any of the avenues, okay, and I want to just enjoy the money. So the government came up with this, that if you don't have any investment, if you don't have any declaration deductions, you can simply offer a new regime that may help you to save taxes. So here we'll try to understand as what all fields we can compute to understand which regime is beneficial to us. So here what we have seen is only up to 10% of filers are using the new regime. So we have understood that if we have more options to invest, if we can plan our investment, we can go for old regime, which will be better to us. Apart from that, new regime allows lower tax rate, but only when we don't have much of deductions. And yeah, we will just go and discuss in the next slide. So this is an example for us. Like if you can just see, starting from the sample data, here we have taken sample of 3-4 components of salary: basic, HRA, other allowances, and rent. What you are paying. Okay, so this rent bit is not a part of the salary. Okay, now say for example, if my salary is rupees 10 lakhs, Okay, like if you see in the right side, if my salary is rupees 10 lakhs in total and I am paying rent, so I can take the calculation what we have discussed earlier, the HRA exempt in my hand, I can take that amount, and there's a standard deduction of 50,000 available. I can also adjust that. If I'm paying profession tax, I can adjust profession tax also from my salary. Now, if you see, we have taken two regimes, new regime and old regime. In new regime, we don't have any HRA benefit, any standard deduction, any profession tax, nothing is available. But in old regime, we can take all these benefits. Now you see, if you see, the salary becomes less. All right. In the old regime, the total salary after all deductions become 7,57,000. Over and above that, if I can invest in deductions, other deductions, chapter 60 deductions like ATC, ATD, whatever it is, if I can invest in that, I can further reduce my salary to 6,19,000. Now, if you see on the left hand side, what tax am I going to pay in the same condition where I'm claiming under new regime or under old regime? So we have seen that under new regime, if you are not claiming any deductions and I'm paying taxes only of rupees 10 lakhs, so I'm actually paying 78,000 of tax. But same thing with claiming all the deductions available, I'm saving 40,000 tax in the old regime. So if you can invest, you can save more under old regime compared to the new regime. I think this makes sense and it is clear to us all. Oh, all right. Apart from this, all right. So here we had discussed that what amount of taxes we can save by investing in certain options. So as we discussed about the NPS, so here if you, as I already told that 50,000 is available under ATCCD 1B. So if you are falling under the higher slab of income tax, you can save up to 15,600 because the tax slab is 30%, and over and above that you pay cess. So you can save up to 15,600 if you invest in NPS. Just like that, if you compare how much you can save in ATC and other sections. Okay, apart from ATC, so we have seen that like ATC only has 1.5 lakhs. What all other options do I have to invest so that I can save money? So now here we see ATD. I think we already know we are paying for medical insurance, we are paying for preventive health checkups. But what is the quantum that we can claim? So for people who are not senior citizen, or if their parents are not yet senior citizens, for them you can claim for self and spouse and children, means you, your immediate family, you, your wife or your husband and your children, 25,000 of the medical insurance what you are paying. If you are paying for your dependent parents and they have not yet become a senior citizen, for them also you can claim 25,000. So this is it is including your preventive health checkup. You cannot claim 5,000 over and above this. But say for example, if you are paying for yourself uh, for the medical insurance policy, you can claim 25,000. For your parents, if they do not have any insurance, for them you can claim 5,000 in preventive health checkup. Now going forward, for senior citizens, like say for example, yeah. So for senior citizens, like say for example, if you are senior citizen, then you can pay up to 50,000. If you're paying more than 50,000, you can claim up to 50,000 of medical insurance and ATC. Or in case if your parents are senior citizen beyond 60, you can claim 50,000 for them also. Now, in case there are several people who might not have a medical insurance policy, but somehow they incurred some medical expenditure. So, for them, what amount can we claim for medical expenses? So, if if the assessee or their parents are not covered under any insurance, any medical insurance, they can claim up to 50,000. Okay, but that has to be specified. They have to be senior citizens. Apart from that, they cannot claim it. All right. Other options what we have apart from ATC and ATD, we have certain sections which might not be applicable to us because it is for betterment of the entire society. So ATDD, by the name itself we can see disabled dependent. Okay, so whenever we have a differently abled family member, it should be a dependent. I'm talking about in ATDD, that if we have a dependent, disabled dependent or differently able dependent on us, and if the disability is more than 40% but less than 80%, you can claim a straight amount of 75,000 as deduction. If it is more than 80%, you can claim 1,25,000 without any proofs, without anything. Just a certification of disability will be required. Apart from that, no other proof is required. Or any amount what you are spending, you can claim up to 1 lakh, straight away 1,25,000 if it is more than 80%. So even if you're spending 2,000, 5,000, it doesn't matter. You can claim up to the entire amount of 125. Now, there's one more section, 80DDB. So it is specifically for those diseases which are either not curable or which are, the high-end diseases like AIDS or such other malignant cancers. So these diseases, so where we can claim for normal person only 40,000. For senior citizen, we can claim rupees 1 lakh. So this is the additional amount what we can claim. Okay. And if the assessee means, if I say, for example, I am filing my return, if I am differently abled, I can claim same as per 80DD. If my disability is more than 40% but less than 80%, I can claim 75,000. And if it is more than 80%, I can claim 1,25,000. So 80DD is for dependent, 80U is for self. Apart from that, say for example, if you have taken any education loan, so the interest component of that education loan is eligible for deductions. There is no limit on this. If you are paying 1 lakh, 2 lakh, 3 lakh interest, whatever it is, you can claim that. Apart from that, we have one more section, 80G, where I think it is very common that if we donate to someone, to some NGO who are registered organizations who have a 80G certification, you can claim the benefit out of the amount donated. So not entire amount of donation is eligible for deduction. If it is a normal charitable organization having 80G registration, you can get up to 50% of amount of deductions of the total donated amount. If you are donating to the specified organizations like PM Cares or CM Relief Fund, ROD Fund, then 100% is eligible. But we have to check what amount of donation we are making, and it should be only other than cash. If you are donating in cash, only up to rupees 2,000 is eligible. So people come and say, can we donate in cash? The answer is no, only up to 2,000, because it is very practical. If you are going to a charitable organization, we would not carry 50,000, 1 lakh of cash to donate. We only have a few amounts and we can donate that. So up to 2,000 is eligible in cash. Apart from that, you have to donate through a banking channel. All right. This was all about ATC, ATD. And now we'll discuss timing of declaration proof submission and what happens if not submitted. So timing, I have already mentioned that whenever the payroll team asks you, they give you a deadline to submit your proofs and to declare your investments or expenses. Please submit before that due date, okay? Because they will also need time to recalculate your tax liability and then deduct according to your salary structure, okay? Now, what will happen if the proof is not submitted? First thing is, if the proof is not submitted, your Form 16 will not be complete. Okay, your Form 16 will not be accurate, that whatever investments you have made. Now, say for example, if you are declaring to your employer, there is a first check. It is a first check that employer is confirming that, okay, you have invested in home loan, you have invested in medical insurance. They are the first check. Now it is available in your Form 16. Okay, so tomorrow you just need to simply go and file your income tax return. But if you do not declare, first thing is they will charge you higher amount of tax. Then you have to go to file your income tax return at the time of filing and then claim the refund. This is first issue what you will face. Secondly, you have to enter manually that whatever amount of investments you have made. Now government may ask you, it is not sure, but if your file opens up, they may ask you that your employer has not declared, why are you declaring? Please submit the proof. So this is again one issue that may come. So please make sure that you submit the proofs in time. Now coming to proof submissions, I'll just inform you about the documents, what all you have to submit. Say for example, if you're considering rent, if you're paying rent and we want to claim HRA, so rent agreement is a must. If you do not have a rent agreement, you can submit your rent receipts, what you are paying to the landlord. Please make sure that you just have a record of monthly payment. You can get it signed by the landlord. It should have the PAN number of the landlord. PAN number is not mandatory if the annual rent is less than rupees 1 lakh. So you can just submit this. Please make sure that if you are paying through cash, then you should be able to like have the proof from where that cash has come. Have you withdrawn from your bank account, that at least that amount should be reflecting in your bank account, because we have seen certain cases where the assessing officer may ask you that if you are paying in cash, what is the proof, what is the source of that cash. Okay, otherwise it is good that you pay through your banking channel. Apart from that, if we discuss on the ATC portion about your home loan interest, then interest certificate you get from the bank. Whatever amount of EMI you are paying, they'll give you an interest certificate where the breakup of principal and interest component will be mentioned, and you can submit that proof for claiming interest on home loan and the principal component. Apart from that, if you are investing in LIC or medical insurance, then you will be having the premium payment receipt. You can submit that, and you can just ask them to adjust that from your salary. Or if you have any other avenues, like if you are paying for education loan, then that also certificate you will be having. You can submit where the proper amount of interest is being mentioned, so that the employer can show it and claim that in your form 16. So this was all about submission of documents and submission of proofs for your employer to deduct less amount of taxes. Apart from that, one very important thing I think you should keep in mind, that whenever you are shifting jobs, we have seen this in many cases, that what happens, that whenever we are shifting jobs, we do not declare the income from previous employer. So that may be, well, we may have many reasons for not declaring that income. Maybe that we have at the time of interview we have shown a higher amount of salary, but we actually had a lower amount. So what will happen is, when you do not declare your income from the previous employer, the current employer understands or assumes that you did not have any other income apart from what they are giving you. So they will deduct the taxes on that income only. But for that financial year, there may be some other income, and the previous employer would also have given you certain deductions and benefit. So which is not allowed. Say, for example, if the previous employer gave you the entire benefit of 1.5 lakhs, that employer did not deduct any taxes. Again, in this current employer is also giving you a benefit of 1.5 lakhs for ATC. Now the total amount of ATC exemption is only 1.5 lakh, but you have claimed 1.5 plus 1.5, 3 lakhs. So here, if you see at the time of filing the return, you will see that there is a liability on the excess amount of 1.5 lakhs. So this will be a tiresome job for you to pay taxes at the end of the year. So please make sure that whenever you are shifting jobs, or even if if your friends are doing it, please advise them that please submit Form 16 to your employer, to your payroll team, so that they can account for that amount as well, and they can compute the entire amount of genuine tax you have to pay. Okay, so that even if it is high, it will not impact you much when you are getting it deducted from your salary. But at the end, when you have to pay interest along with the taxes, because that is the advance tax you did not pay. All right. So I think we are at the end of the session, and I hope that it would have been educative to us all. I'm open for questions now.
So Rahul, there are a few questions in the chat box. If you can answer them one by one, then it will be a great help.
Yes, please. So I'll take up the questions. Just give me a second. So I think my colleague Sekat would have been already answering the questions, and so we had a question from Manisha. Can we claim for the property outside India? So actually, we cannot claim from the for the property which is not in India. If it is outside India, we cannot claim it. Uh, Apart from this, how to cater HRA exemption and what documents are required if yearly rent is beyond 1 lakh. So as I've already told that if the rent paid is beyond rupees 1 lakh, then you should at least have a rental agreement with your landlord. And if the landlord did not have any agreement with you, at least you should be having rent paid receipts. Okay, please try to prepare the rent receipts where his name, his PAN number, and the date of rent is mentioned. please get it signed by the landlord. This will be a proof for you. And if it is through cash channels, you may have to keep additional proof for yourself. Tomorrow, if the assessing officers comes and ask you, to show how did you pay rent, and if you show that I paid cash, he may ask you again that what is the source of that cash. If you are not able to justify that source, they may include the entire amount of cash paid as income from other sources, because it is actually unaccounted money. If I have withdrawn the money from bank, it is a proof that I can show the bank statement. This is the amount I have withdrawn. Okay, this can be done. But if you have no proof for showing that cash, the source of cash, you may be in trouble. Okay, Mr. Abdullah asked that is ELS is included. Yes, ELS is very much included. Is there any other document required from landlord's end? I think I have discussed this in detail. So Roshan asks, can we declare HRA and housing loan both? So considering property is under construction. So here I think, see, here's one thing. Whenever property is under construction and we have not received the possession of the property, in that case, you cannot claim the interest component under income from other sources, neither the principal component. Now, if you ask why, because for the property under construction, we have a different rule that the pre-construction interest can only be claimed once you have received the possession of the property. Okay, and what will happen? Can you claim the entire amount? Say, for example, you have accumulated like interest of rupees 10 lakhs. Okay, 10 lakh interest you have already paid under pre-construction. So, can you claim the entire 10 lakhs as a limit is only rupees 2 lakhs? What we have discussed. The answer is you can split this rupees 10 lakhs into 5 equal installments, and you can claim each installment each year. So once you get the possession for next 5 years, you can claim the pre-construction interest cumulatively in 5 parts. This is what you can do. And yes, you can claim the HRA because the property is under construction. Is donation exempted completely 100% for the TDS? So answer is actually no, because we have to see what kind of donation to whom you have given. So this all has to be considered to analyze whether it is falling under the category of 100% or 50%. Okay, so there are certain conditions also like 100% with limit or without limit. Okay, so this all we have to see based on the nature of donation and to whom we have donated. I think yes.
Hello, Rahul, Roshan this side.
Yes, Roshan.
My question regarding HRA and housing loan declaration. There is another condition when my property is in other city and I'm staying in other city, and
Okay.
I'm having housing loan and I'm staying on the rent. So what in that case if
In
the
in
possession
that
has
case,
been.
yeah, I've got it. See, now here we have to understand two things. One is, first is the property is under construction or not. Secondly, are we saying staying in the same city or not? Now, say if you are staying for work purpose, okay, for the purpose of your employment, if you are staying in a different city and you are
Mhm,
paying rent there, in that case you
mhm.
can claim both for home loan interest if you have already got the possession, and for
Okay.
HRA too, you can claim both of them. But in case the property is still not under possession, like either by you or by your family, if the property is not under possession, again you have to use that method of pre-construction interest. You can add this in next 5 years. So this
Okay.
is how it works.
Okay. Got it.
Yeah. Yeah. Okay. All right. So moving on to the next question. Joint home loan benefits claim. Okay. Amit, yes, we can claim for joint home loan. Now we have to see if it is 50% or how it is. So both the joint owners, if they are independent, if they are working independent, both can claim their portion of interest and principal. Say, for example, if you are paying 1.5 lakhs of interest and 2 lakh of principal, in that case both persons can claim 75 of interest individually and 1 lakh of principal component in ATC individually. This can be done. But say, for example, if you and your wife are buying the property in joint account, and your wife is not doing anything, she's not working, she is a housewife, she's handling the house, in that case you should be claiming the entire amount because you are paying for that house. Okay, you are the actually you just mentioned her as the name in the joint ownership, but the entire amount is going from your account. Technically, you should be claiming that. So I hope this answers. Apart from that, what is the max NPS limit? I know it's 50K and we can save 15,600, but I'm not clear about employer's contribution of 10%. Does it separate? Yeah, so employer contribution comes under 80 2, and what we talked about 50,000 is 80 1B, which is the additional benefit you are getting over and above all the contributions together, like PPF or VPF, whatever it is. Beyond that, if you're paying personally for your NPS beyond your employer contribution, yes, you can claim in 80 1B. Okay, what employer is paying you, that comes under 80 2. So you have to check with the employer. Yes, so I think Mr. Secretary already answered this. Thank you. And apart from that, is there any tax calculator in HRMS where any individual can themselves calculate and assess the tax as per the investment? I think you should connect to your payroll team, or you can just reach out to Clear Tax also. They may also be able to help you on this. Are medical and transport allowance taxable? So we have to check what is the limit and what are the transport allowance. Are they in your CTC? You should be having a breakup of these components in your salary structure, and then we can see how much amount of medical and these expenses are exempt. So these are mostly exempt under Section 10, and now I think most of this are obsolete. So we have to check with this. So we can just contact for this separately. What can we include? What can we include in Mediclaim? So in Mediclaim, I did not get the question if it is Mediclaim what you are getting or medical insurance. So Mediclaim is when you claim for your expenditure from your insurance company. Okay, and medical insurance is where you pay for the insurance premium. I think your question was for insurance premium. So yes, whatever insurance premium you are paying, the entire amount of premium you can claim. Yes, I got it. ATT. Entire amount of insurance premium what you are paying, as I discussed already, for you, your wife, or your husband, and your children, you can claim up to 25,000 if you are not a senior citizen. If you are a senior citizen, you can claim up to 50,000. Apart from that, if you are paying for your parents, if they are not senior citizen, again 25,000 over and above your medical insurance expenditure. If they are senior citizen, 50,000. Okay. Apart from this, I see this includes the preventive health checkup. Now, say for example, if you are paying medical insurance for yourself rupees 10,000, for your parents rupees 15,000. Okay, so the total becomes 25,000. Now you can claim additional 5,000 for you or for your parents, anyone. This additional you can claim because the limit has not yet exceeded. But once you pay 25,000 for yourself and 25,000 for your parents, you cannot claim additional 5,000 for preventive health checkup. Does donation include donation to political party? Yes, it includes the donation to political party also. The limits are different. Please help with the clarity on 80 CCG. So this is actually obsolete. This is not available right now. So this section has gone long back. So we don't have this. All right. I think we are towards the end of the session. I hope I was able to clarify your questions in detail. If you have any other doubts, you can always reach out to your payroll team or to the tax consultant whomsoever you are consulting. You can reach out to them and discuss. Please make sure that the proofs, whatever you are you are having, you declare it before the portal closes. Otherwise, the payroll team will have to calculate with the information what they have already, and then you may end up paying higher taxes. So please make sure that the proof is submitted in time. And thank you, everyone. Thank you, HRMS and Clear Tax, for having me here. I had a wonderful session with you all. Thank you for being an like incredibly good audience to ask so many questions. I'm really happy. Thank you so much.